Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about Teladoc Health stock. In this video, we are going to be going over everything Teladoc, okay? From their financials to what their business plan is to future plans and why I personally own this stock. But first, I have to say, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, before we jump into it, if you could, hit the like button and subscribe down below if you want to see more content like this. Right now, we are in the middle of what I'm calling Growth Month, okay? This is going to be, 8 total videos of 8 individual stock picks that I think are going to be high growth stocks that may have been impacted by, the lows of the markets recently. So as you know, really high conviction, high growth stocks have been getting slammed. But these aren't very fearful times for me. These are times to, reinvest, buy in, buy the dip. These are amazing buying opportunities because as we can see from earnings that are coming out, these companies are still very strong and people are just afraid of inflation numbers. Anyways, let's just get right into this. I want to try to fit a video all in 15 minutes around there. I don't like going much longer than that. And we have a lot to talk about with this company. So Teladoc is a massive organization and the leader in the telehealth space. Okay, and what I mean by that is that they provide healthcare via web service or even applications on people's iPhones or Androids and allows people to contact their doctor for non-emergency reasons. They do this on a business-to-business basis. Now, although they're, servicing individual patients, really, the people who are paying for it are insurance companies, individual employers, these sorts of things. So it's a business-to-business service that they're doing this all around the world, completely internationally. Most people think of Teladoc as just being the one service as Teladoc, but they have a lot of brands under their umbrella. With such brands like Teladoc, Livongo, Advanced Medical, Best Doctors, Better Help, and Healthiest You. But for the sake of time, I'm only going to go into one acquisition, which would be the acquisition of Livongo. Livongo gives a device to their diabetic patients to be able to test their blood sugar levels and upload them directly to the cloud. If your readings are ever abnormal, a consultant will contact you within 90 seconds to tell you what to do next, whether that's diet, exercise, or even going to an emergency room. These devices are absolutely free to the actual patients who need them, but it's their employers who pay for this service, around $65 a month. And some of the employers who have signed up for this program are like Amazon, Target, and even Boeing. Now, let me just give you some roundabout ways of what their total addressable market is. Just around 1 in 10 people in America have diabetes, while 1 in 3, around 88 million Americans, are pre-diabetic. Or let's even talk about obesity rates, for example. So obesity rates, the highest cause for diabetes. Let's just give you some statistics over time, okay? So for example, in the 1980s, the obesity rate in America was 13.4%. Yet in 2008, it was 34.3%, and then in 2020, now it's 42.4%. So not only has these devices been needed since the beginning of time, but the actual amount is actually growing. I mean, people, although, my last stock that I just talked about, Peloton, the fitness side of these things, the obesity side is actually a growing industry as well. So although fitness is going up, as well as, we're finding two extremes here of people who are working out more and more and more, and then people who, are having troubles losing weight and these sorts of things. Now, although that's Livongo's main device, it's not their only device. They also have blood pressure devices and all sorts of things covering multiple chronic conditions. Just Livongo alone is growing out this massive brand name to multiple Fortune 500 companies that want to give this to their employees, and they're charging $65 to $75 per month. How is that not insane to you? And that's only one part of Teladoc's business, let alone, if you guys are on YouTube, I'm sure you've seen the advertisements for Better Health and Best Doctors and all these things, and it's just, they're capturing every market. I am absolutely, in love with this. Currently, from the chronic conditions that Livongo can cover, their total addressable market is about 147 million users, yet they only have 220,000 members. And this is why this stock is trading at such high multiples, is because the addressable market is just unbelievable. And this is the way venture capital works, or at least I know it's out of the venture capital stage, but it's the way a lot of people look at it, is they don't care about the company as much as they care about the addressable market, the disruption of a massive market, and that's why telehealth is seeing the boost that it's seeing. Livongo currently analyzes all its data that it gets from its members. So much information. They sell it, to insurance companies and all these things to get better risk assessments of their clients. It's a massive money-making business, and the amount of data that they take continues to go up every quarter. longer. And the results for these devices are absolutely working. Diabetics who follow Livongo's program closely find noticeable results in their lowered glucose levels, which in return leads to Livongo patients having a 17% lower medical cost for their diabetes-related illnesses, which also led to a 11% drop in all medical claims and a 21% lower chance of going to have an ER visit. Just to give a broader sort of, impact that this could have, chronic illnesses in America make up for 70% of the healthcare costs. That's a $3.5 billion healthcare bill that, the United States has to care with each and every year. So what does that mean for Livongo going forward in terms of going after other potential illnesses? Like, for example, COPD, asthma, Crohn's disease. Because in an evolving healthcare space, we may not need a visit to the ER every time. We may only need really accurate readings or just some well-timed advice on how to lower those the readings or depending on the illness, I guess just whatever thing might bring it to, the normal, get it out of the abnormal readings. Depending on the type of medical concern. I mean, sometimes, your readings want to be up or down. So I feel weird saying down, but it all depends on, the certain disease or illness that you might be, dealing with in that current state. I'm not a medical expert, okay? I'm just a stock picker. I know healthcare enough to know that, what prints money. But I mean, whenever we even look at the $3.5 trillion bill for healthcare needs, and then you look at Livongo bringing down 17% reduction in medical costs, I mean, how can you not see policymakers even, boosting up Livongo and Teladoc overall for, trying to help this big bill? I mean, that could get people elected alone is that significant of a tax cut. These are amazing ideas in terms of if you can bring down their help, then you can get government help pushing your product forward. I mean, that is the key to all of this. And that's why, you see people like Cathie Wood, for example, buying up this stock like crazy because she knows that the acquisition of Livongo is so huge. Now, let's just go into the little bit of the financials of Teladoc overall. So for example, we have a market cap of around $23.4 billion, okay? With a current share price of $151, okay? But the reason why I'm making this video and why this is such an interesting stock is that the 52-week high of the stock is $308. That means within this year, okay? Within 2021, this stock has dropped over 50% since its all-time highs. But here's the thing, in my opinion. Okay? Stocks, most of the time, whenever they hear great news, they over-exaggerate and they bring up the cost so much. But then whenever bad news comes, they usually over-exaggerate, going down as well. And they oversell the business. And that's a terrible idea too. When in reality, I'm sure the proper valuation of most of these stocks that are dropping these huge amounts are probably somewhere in the middle. But just going on to their cash, okay? This is not as exciting as the last stock I covered, but their cash, $723 million, where the debt, we look at $1.4 billion. And obviously, heavier on the debt, they're probably not profitable. They're still spending tons and tons of money on acquisitions and, trying to build out their current client base and build out their businesses and their suite of products. And so the PE ratio, non-existent, they're not profitable currently. But I mean, if you guys have been following Teladoc at all, you'll know that their guidances for their future quarters have been very conservative overall. Let me give you an example of this, okay? So for example, we're going to use Q1 of 2021. For that, they had estimated an adjusted EBITDA of $45 to $48 billion. What actually happened was that they put out an actual quarter of $56 million of adjusted EBITDA. That makes up for a 21.7% stipulation of what was actually going to happen, okay? Let alone how much stronger that was from their previous quarter, hundreds of percents stronger than what they had received their last, Q1 of 2020, so year over year. But then what they actually thought was going to happen was still so far off from reality. So now let's take that to now, what's going to happen, Q2 of 2021. They're expecting an adjusted EBITDA of $61 to $64 million for that quarter. But obviously, like what happened last quarter, that could be very conservative. So for example, just for fun math, and this is completely arbitrary, Tanner math, whatever you want to call it, what if they now perform 27.1% better on this quarter, on the 61 to 64 million? First of all, that's already 138% better year over year is what they're expecting. Now, if it is a conservative guidance, and they do perform 21.7% better, maybe even more, maybe less, I'm just saying this is an arbitrary number, that would lead to 189% year-over-year growth on their adjusted EBITDA, smashing out an amazing $76 million quarter that may or may not happen next quarter. I'm just saying, let's just put it on the books. I'll just put it in this video just to see next quarter. If that's the number, you guys know you got to hit the subscribe button because I slammed it out of the park. They always post their guidances a little bit more conservatively than they could, and that they usually want to under-promise and over-deliver. It makes for a great stock price, and I think Cathie Woods sees that. And now I want to go on and talk about, who owns this stock a little bit. Ark Invest Holdings holds so much Teladoc. It's actually their second highest holding. Okay. And you can look at their trades because it's an ETF that they have to post it daily rather than like a mutual fund that has to post it quarterly, for example, that you can see that they are posting that they're buying Teladoc like almost every single day and not selling. Okay, but let me tell you how important that is, because right now all the markets are dropping. People are pulling their money out of Ark Invest. Like they're redeeming their money because they're scared of markets, they're scared of inflation, they're scared of all these things, just like the rest of these growth companies. And of course, she's selling certain companies like crazy. She's selling Square, she's selling Roku, she's selling some of her biggest holdings. Teladoc, for example, she's not selling a share. She's only buying and buying every single day. It's amazing to see because, it's already her second biggest holding. Like what if this company actually becomes her biggest holding, higher than Tesla? At what point are people going to realize that her conviction on this stock is unprecedented? Even whenever we think about Tesla, for example, Tesla being her biggest holding, she only holds 0.5% of that entire company's, the weighting of the company. But then, whenever we look at Teladoc, because the market cap of this company is only like $23 billion, she holds 9.5% of the entire company and continues to buy it. So in my opinion, I think she has a way higher conviction rate than on Teladoc than she does on Tesla. I do actually think this is her highest conviction stock, just because it is so hard and so much more risky to put this much money into a small cap company. It has a way higher chance of failing. And it's not like they're the only one in this space. Amazon is in this space as well, trying to take over telehealth. And going up against a giant like Amazon, you definitely have, a chance to lose. They could swallow you up. But Cathie doesn't see that. Her whole team of analysts are looking at this company, and unlike what she's doing with Palantir or some of these other ones, that she's just taking good bets on, half growth companies with decent numbers, to have a conviction as high as Cathie does on Teladoc or Square or Roku, but she even has higher than her famed Square or getting up there on Tesla. I mean, geez. And yet, you have to have done a lot of research, real, this is not her just trying to place money. These are real bets. And she's not talking about real price targets for this company. She's just placing bets. I don't think there's any, weird sort of things that she's doing. I don't see a lot of posts trying to get her to, pump this stock and get out. She's just continuously holding on for the long term. And the reason why I'm so bullish on this company as well is that, the trade is so easy. Okay. For example, this is the way you got to look at it. I mean, this is not financial advice. It's just my opinion. They are bar none the leader in this space. They are the standard for a lot of health companies to consider Teladoc the main service. The question that you got to be asking yourself is, after the pandemic, is telehealth still going to thrive? Are people going to wait in lines at the doctor's office and, wait to be seen versus, getting a call on your phone and being able to go about your day, still continue working, and then it's going to vibrate, you pick it up, you have your meeting, it's going to be quicker, no lines, you don't have to leave the house, and then right back to work again or going out to get medication or whatever the things that you have to do are. It's even better for the doctors, okay? So for example, a doctor that has to see patients one at a time versus the telehealth thing where it immediately connects you with a new sort of patient, that you're actually allowed, and they have done these studies, that you see way more patients in that amount of time, but yet get paid the exact same. Okay, so it actually incentivizes you as a doctor to go do this telehealth thing, although it may not be as helpful for the patient. It incentivizes you as a doctor to, to get more money this way. So you might even, tell your clients you don't need to come in. Let's just do a call first. Let's see how that is. And then if it is something that we need to see in person, you can always come in and we can schedule that. If anything, this company will be an amazing learning experience. It's something that's so out of the ordinary, especially Cathie buying this is so out of the ordinary. She's not placing regular bets on it. She's placing such an oversized bet on such a small company. It really, it must turn some heads because she has very, very high conviction, especially holding 9.5%. I'm sure she has, directors on the board of directors. I'm sure she has, very close ties with the CEO and the people of this company and know exactly what their plans of growth are. Things that, aren't quite posted on public forums or even their shareholder letters. It's an insanely cool company, but most importantly, I want to know what you guys think about this stock. I want to have a conversation down below. Like what do you guys truly think about this company? Do you think once people get back to normal, they'll never use this again? Like I know millennials are using this apps like crazy. They love the telehealth, but is the rest of the world, like are boomers going to be using this? Like who knows? Anyway, I'm getting off topic. If you guys like the video, please give it a like and subscribe down below if you want to see more content like this. Until next time, guys, I really appreciate you guys watching. Stay safe trading, and look out for my next video on the growth month. We got about 6 more videos left to go, and I'll see you guys next time. Bye now.